We're back. The Nigerian equities market escaped the rout at the global marketplace in the first half of the year. That's if you discount the sell down in the month of June and the risk-off sentiment as we are seeing as July raises the curtain on the second half of 2022. Nnamdi Nwizu, a co-managing partner at Commercial Partners, joins me here now to speak to what's on his playbook at the investment services firm. Good to see you. Thanks for coming.
Great to be here.
Great. Thank you so much. What's on the playbook at Commercial Partners in the second half of 2022? It looks like we're starting off with a bit of soft tiptoe, as it were, trying to find out what's going on.
Yeah, I mean, definitely it's going to be a cautious one for most investors going into the second half of the year. First half really hasn't been great. If you look at the global markets, beyond the Nigerian equity market, most people have struggled, in Nigeria. So if we look at, we have a lot of headwinds. If we look at what's happening in the U.S., the U.S. economy basically drives the world. And we look at high inflation, we look at the Fed continuing to raise rates. We consider the fact that there's a lot of talk of them going into a recession. And every time the U.S. goes into a recession, you always end up with basically like a global recession also. So, for us, it's a cautious one. You have to cherry pick what assets to look at, what assets to invest in at this point in time. If you look at the economy as a whole, look at GDP, look at inflation, doesn't tell a fantastic story right now. Look at insecurity and all. They don't paint a fantastic story for most Nigerian investors. So it's a cautious one, trying to figure out which asset classes best suit your investment appetite and co.
Well, here we are with Nigerian investors more on the ground rather than foreign investors locally. So should they be so worried about the external headwinds if the Nigerians are investing more in the local market, in local financial assets than we had in the last 3, 4, 5, 7, 10 years?
Definitely, you're right. If you look at the equities market, we have roughly about 90% or 95% of investors now, transactions are basically local. But you're not isolated from the rest of the world. So if you look, for instance, at what's happening with the currency affects the local markets. And you see the Nigerian currency, looking at parallel market rate, the value by about, 20% this year alone. So that basically has an impact. It's difficult to drive your economy if you don't have foreign investors coming in anywhere in the world. Even in the US, they still depend on foreign investors, despite the fact that they have a really huge market. So if you look at FPIs also, or look at foreign direct investment in Nigeria, look at foreign portfolio investment in Nigeria, they're also falling. So it all feeds into economy as a whole.
Well, what exactly are the key risks to investors right now in terms of the various asset classes as the second half gets underway? Is anything changing significantly for Nigerian investors from the first half into the second half, or is it just the flip side of the same coin?
I think it's really more or less, we have majorly the same things. You have security, which is a big issue. We read about the Kuje prison, for instance, right? So imagine you're an investor in Abuja. Imagine how you would feel knowing that you have, about 400 hardened criminals out there on the streets. Insecurity continues to be a big issue for everyone. I think also looking at inflation, we continue to see a rise in inflation. And that naturally has a huge issue for us. Same thing with currency. So as we look at security, you look at inflation, you look at what's happening with the currency, you look at even power generation, the fact that you've had, over 200 blackouts over the last maybe like 5, 6 years, all these things all feed into the economy as a whole. So, you look at all those things, yes, most of them we faced in H1 of 2022, we're going into H2, some of them are actually getting worse. If you look at the power market rate now, it's about 623, 624. And just 2-3 weeks ago, we were like 600. So you continue to see a constant evaluation of the currency, which will continue to impact inflation. And that naturally continues to increase the risk that Nigerian investors face.
So what do we need to get a lift off? On the macroeconomic side, right?
Yeah.
So what needs to happen on the macroeconomic side?
I would say, basically, Nigeria just needs to get its act right. We've known that that's the issue for years. So it's not as if you can say one thing in particular is going to solve the problem. There are so many issues that we have, right? And I would say starting with security, because it's becoming a real concern, not even just for your typical foreign investors, even for the local investors. So the number of states you can go and invest in comfortably are reducing. I know people who are into agriculture and have had to abandon their farms because of, insecurity. And you think that agriculture is one of the major things that the government has been pushing to try and get us back on track. And it's, if you look at GDP numbers, it's one of the non-energy sectors which is still performing relatively well. So insecurity needs to be addressed, one of the major things. And then you start looking at what government can do to rein in inflation, because inflation is impacting on everybody, the common man on the streets, all the businesses, and it's difficult for the businesses to pass on this inflation to the end users. There's only so much that your end users are prepared to pay. So you need to figure out, how to go about that.
Interesting, how much of the externalities that local investors can take on board in the second half of the year, with expectations that the U.S. will continue to raise rates. U.S. is likely to fall into a recession, perhaps by the end of the year, maybe into 2023. Then you look at whether oil prices, if you have that contraction, then oil prices will collapse down perhaps well below triple digits. Into double digits. So, do you think we can manage these issues from the US Fed, from the ECB, from the Bank of England?
Well, it's a tough one because, definitely, like I said earlier, we are 100% going to be impacted. There's no doubt about it. We just have to keep on looking at ways to try and forge on as a nation and hope that, you have an election coming up. You hope next year, people voting, whoever it is, and that the next person can help move the country forward. Continue to look at all those things you've mentioned, and you continue to see how they tend to impact the Nigerian market. And then you see that it doesn't look extremely optimistic right now if you're looking at the economy as a whole. A lot of the things need to be turned around. You talked about crude oil price at 100 and something, and we can't even take advantage of that. So our production is crashing. We're maybe roughly about 1 million barrels per day versus our 1.8 million barrels quota. OPEC, and we've not been able to gain from the spike in crude oil. If you remember the Gulf War, during the Gulf War, Nigeria had a windfall, right? Yes, but this time, rather than having a windfall, it looks like the higher the crude oil price, the more it seems to affect us because of forced subsidy and the fact that you have dwindling production.
And huge imports and theft. Yeah. Okay, so where is the safe haven? Tell me.
Safe haven locally, still be fixed income for now. Fixed income, and you still have a few companies in the equities market that would still thrive well despite what we're going through. If you look at telecoms, even just looking at GDP numbers and looking at the fact that you have telecoms growth, if memory serves me right, I think it was about 12% or thereabout. So that sector, for instance, continues to do well. People will continue to make phone calls. People will continue to use data, because data seems to be the new oil that you have in Nigeria. So I think looking at that sector, if you're going to look at telecoms, communication, they're doing pretty well. And if you want to look at Nigerian fixed income, if you're looking at a safe haven as an investor, areas where you want to be sure your funds are going to be there over the next 3, 4, 5 years, those are the sectors. But if you go into your core manufacturing sectors, it's a struggle. Everybody knows that. Everybody knows what's happening. Even the cost of diesel, which has gone up about 4-fold over the last year, already tells you what a number of manufacturing companies are going through right now.
In terms of, if you're talking about wealth or asset management, where do they want to put in their money? Are they stepping out of looking for investment vehicles, investment assets outside the country?
Well, a lot of investors that we see now, especially the Chinese, are all looking for exposure, foreign currencies exposure. So most of them naturally looking for dollars, looking for euro bonds. You had the number who wanted to also go into the U.S. equities market, but we've seen that has, suffered a bit, taken a hit due to what's happening, the Fed raising rates. Interest rates typically don't augur well for stock, right? Because look at cost of funding their positions and all of that. When you can get better returns on the fixed income, then equity becomes a less viable option. But we've seen quite a number of people moving into the Eurobonds market. You've seen yields get pretty attractive. If you look at Nigeria, you have 2025 Nigeria Eurobond at about 11%. You have 2051 at about 13. What is the Nigerian 2050 local bond trading at? About 13. So if you're an investor and I could invest in Nigeria and get 13% dollar or 13% naira and suffer the valuation, right, I would go for the dollar. So we've seen quite a lot of interest from Nigerian investors right now.
I want to say that whichever way, head or tail, dollar wins. I don't want to say that, but you didn't hear that from me. And I didn't hear that from you.
Well.
Thank you. Great to have you on the show tonight. Thank you so much, Nnamdi Nwizu, the co-managing partner at Commercial Partners. Enjoy yourself, and let's see you next time.